In class 11, accountancy, today we are going to start a new chapter, that is depreciation. See my dear children, that is very important topic. Am I audible? Meg? Meg? Am I audible? Okay. So today we are going to start a new chapter, that is depreciation. Depreciation means a reduction in the value of fixed asset. And my dear children, today that is the main topic, because the fixed assets are going to depreciate and the value of fixed asset is going down. Fixed asset, land and building, plant and machinery, furniture and fixtures, that's value are going down by continuous use, by expiry of time, by obsolescence. So today I am going to explain you the theory of this chapter, then further we will discuss. So depreciation is always occurs on fixed asset. So see, I am going to share NCERT with you, and then you will be able to understand, make your own notes, see what is depreciation. Look here. Depreciation means, mark that line, depreciation means decline in the value of fixed asset due to use, passage of time, obsolescence. This is the definition. Definition of depreciation means decline in the value of fixed asset due to continuous use, passage of time or obsolescence. So in the production process, generally the value of machines, value of fixed asset going down. Like if you bought one Activa or vehicle in 50,000 rupees, continues you use, one time that vehicle met with an accident, then the value, if you want to sell it, the value of the vehicle will not be 50,000. So what is the reason behind that? That is the reduction in the value. What is the reason? Reason is only one, that is depreciation. So my dear children, when we use any fixed asset, when the passage of time means time asset passed here, even if you are not using, like I bought a car and that is in the garage only, I bought it in the 5 lakh, but now if you are going to sell that, that will be near about 4 lakh. So what is the reason of reducing the value? That is depreciation. And obsolescence? Obsolescence means outdated. Our fixed assets are going to outdated because new things are coming frequently. Advanced technology is going to come fast. In the electrical appliances, in the cell phone, in the vehicles, we can see various changes are there. Even the new technology is coming with the new features, advanced technology. So all things are being outdated. That is known as obsolescence. Okay, so obsolescence, like I am giving you the example, black and white TV, that is outdated nowadays. No one will use that black and white TV. So that is obsolete, and the value reduced will be termed as depreciation. I am sure you must understood this. Now see, in the simple, even if the machine is not used in the production process, we cannot expect it to realize the same sales price even due to the passage of time or arrival of a new model. Just now I gave you the example. I bought a car in rupees 4 lakh. Am I audible? I bought a car in rupees 5 lakh. I was not using it from the last 2 years. That is in my garage. But when I want to sell it, due to passage of time or due to new models come in the market, the old one will become outdated. That is obsolescence, or passage of time is also the reason of depreciation. So fixed asset decline in value, and then decline is technically referred to as depreciation. See, currency is not going down generally the value of land and gold is also not going down. Generally, the value of land and gold is appreciated, means increase the value by passage of time. But we are telling you about here about land and building, plant and machinery, furniture and fixtures. So, we are going to give you the example decreasing in the value of fixed asset. That is termed as depreciation. Okay. So depreciation in accounting term we can say depreciation is that part of the cost of a fixed asset which has expired on account of its usage and lapse of time. By continuous usage, if you are using one plant, one machinery, furniture continuously, the value will be less in the future because the value is going down. So we can say, like I am giving you the example, you can see on the screen, machine is purchased for rupees 1 lakh. Useful life is 10 years. It implies that the machine can be used in the production process for next 10 years. So 1 lakh is the value for 10 years. Okay. So when income statement is prepared, the entire amount of 1 lakh cannot be charged because that is to capital expenses. That 1 lakh is to be shown in the balance sheet. Then 1 lakh divided by 10 because that value is for 10 years. So 10,000 rupees every year to be shown in income and expenditure or profit and loss. Okay, statement of profit and loss will be included 1/10 of 1 lakh rupees. I will give you the formula of that. Okay, so depreciation is a charge. Please mark that amount. Depreciation is a charge against profit. It is to be debited to income statement or we can say statement of profit and loss account. Okay, now mark. Depreciation is described as a permanent, continuing and gradual shrinking in the book value of fixed asset. Okay. Gradual. Gradual means by passing of time. Gradual means that is reducing one by one. See, I am going to show you through. See, first point, permanent. It is the reduction of the permanent basis. Like if the furniture is useless now or the leg of your one sofa is not there, that is the permanent decrease in the value. But it is a continuous process. Continuous process means what? It is going down continuously. We cannot say that 1 year it is depreciation and next year it is not. And it is a gradual shrinking. Gradual shrinking, my dear children, gradual means step by step. The value is not going down suddenly. Not going down suddenly. That is gradual means one by one that is going down in the fixed asset or the month by month or it is based on the cost of asset, not on its market value. These points you will keep in mind. Depreciation is based on the cost of the asset consumed, not on its market value. Market value is fluctuating very fast. We cannot calculate it on it. So, see, the depreciation is of the depreciation is described as permanent, continuing and gradual shrinking in the book value of fixed asset. It is based on the cost of asset consumed, not on market value. So now Next, I am going to tell you about other things. See, features of depreciation, one by one. Decline in the book value. It is known that it is decline in the fixed asset. Then it is the loss. Oh, my dear students, this is the loss because the value of asset is going down by the passage of time, by the usage, or by the obsolescence or outdated. Yes, now it is a continuous process. Yes, it is a non-cash expenses. Be careful. Depreciation is a non-cash expenses because cash is not going out or going in, coming in. No, cash is not involved in the depreciation. The value of asset is decreasing only. Then now we are on very important topic, that is depreciation and other similar term. See, my dear children, depreciation and other similar term, one is depletion. One is depletion. Okay, am I audible? Mehak, am I audible? Okay. So depletion is used in the context of extraction of natural resources like mines, quarries, etc. So depreciation term is used for fixed asset, but depletion is used for natural resources like mines, quarries, etc. Like value of coal mine that decline with the extraction. Give the example. Write the example. That is the example. Value of coal mine declines with the extraction of coal out of mine. Mine's value is not decreasing. The quantity of coal is decreasing. This is termed as depletion. So we can say depletion and depreciation are similar term, but the reason is different. See, the main difference, okay, the main difference between depreciation and depletion is that former is concerned with the exhaustion of economic resource, but the latter is used as the usage of an asset. This is the basic difference. Okay, depletion is generally in natural resources by continuous use of it. So the value of going down, this is termed as depletion, that exhaustion of natural resources. But depreciation means usage on a asset. Like furniture, if you are using, that will be depreciated. Even if you are not using, then the by passage of time, that the value of fixed asset going down. Okay, so the main difference between depletion and depreciation is that the former is concerned with exhaustion of economic resources, but the latter is related to the usage of an asset. Okay, so depletion means extraction of natural resources. Oil well, we can give the example. Oil well, when we continuously use that oil well, the quantity of oil will be less in that well. When we continuously take out the coal or stone from the mines, the quantity of stone and coal will be less in the mine. That is depletion. Okay. So next is amortization. Amortization refers to writing off the cost of intangible assets like patent, copyright, trademark, franchisee, goodwill. Okay, please note down what is amortization. Amortization means writing off the cost of intangible assets like patent, copyright, trademark, franchisee, goodwill, which have utility for a specified period of time. See, in accounts, we gave you various types of examples. Some are tangible, some are intangible. Tangible means those assets which we can see, feel or touch. And intangible means which we cannot see or touch, like patent, copyright, goodwill. They have utility for a specified period of time. Okay, so the basic difference is that these assets are related with intangible asset, amortization is related with intangible asset, while depreciation is related with tangible asset. Now next topic, causes of depreciation. Causes of depreciation. First is wear and tear. Wear and tear means deterioration. Use or passage of time. If you are using, then the value is going down, or the passage of time means the time is going to pass. So the value of asset is going down. Continuous diminution in an asset value arising from its use in business operations. It reduces the asset's technical capacity. Okay, so why the asset wear and tear? Note down please. This happens especially when the assets are exposed to the rigors of nature like wind, rain, etc. If your furniture is in the rain or in the direct sunlight, that will be, value of that will be going down. So this happens especially when the assets are being exposed to the sun, to weather, to wind, etc. So by the passage of time, the value goes down. Then next is expiration of legal rights. Many times the value of asset is going down when the legal right is expired, or the agreement is over, or that pre-decided time period is over, like patent, copyright, lease. Just now I give you the example that is known as value decreasing. Then obsolescence. Obsolescence means outdated. If we are not capable to use those things, or the features, models, techniques is old and outdated, or those things are not possible to use nowadays, that is obsolescence. Or the new models will come out, like black and white TV. In olden days, that is one VCR is there, okay, and the phones are little bigger. So the shape, size, design, color, utility, techniques, technology, everything is going to change. See, the business environment is dynamic. That is changing very fast. So the obsolescence means fixed asset out of date becomes out of date. It is become out of date, or the better technology comes out. That's why technological changes, improvement in production methods, change in demand, legal or other descriptions, say change in market demand. I am going to give you the example. In old days, when the new computers came, that was in a big shape and heavy body. But nowadays, you can see everything is in microwave. Like small laptops are there, small computers are there. So it is becoming changed. Like phones also you can see, electrical appliances you can see, various things are there in which technological changes are there, and production methods are also going to change. Now, no one is using old outdated methods of production. Everyone is trying to use the new one, okay, which are advanced in technique. Now next is abnormal factor. Abnormal factor is also the reason of depreciation. Yes, Be careful. Such abnormal factors means accident. Okay, accident due to fire, earthquake, flood, etc. Now you can say why it is abnormal. Because normal losses means which can occur in normal activities, routine activities. Abnormal means not in routine activities. See, earthquake, flood, natural calamity which are not pre-declared, pre-forecast, pre-estimated are known as abnormal. Okay, so many times, generally the depreciation is a normal reason, but depreciation can occur due to abnormal reasons also, due to fire, earthquake, flood, etc. etc. Like example, note down, a car which has been repaired after an accident will not fetch the same price in the market, even it has not been used. Just now I gave you the example of my car. See why we calculate depreciation. Need for depreciation. Need for depreciation. First is matching of cost and revenue. This is the expenses of the business. And routine expenses is the business. So if we want to find out the actual revenue, we have to calculate depreciation. Then consideration of tax. Yeah, please be careful. Depreciation is a deductible cost for tax purpose. Whenever we calculate tax, we have power to deduct that depreciation. Then true and financial position. True and financial position means if you want to calculate true financial position, clear, fair financial position, deduct the amount of depreciation. The next is compliance with law. There is some certain laws are there like company law, partnership act, everything that the depreciation should be entered in the books, and according to the GAAP also, generally accepted accounting principle, depreciation should be calculated. Then factors affecting the amount of depreciation. In some asset we charge more depreciation, in some asset we charge less rate. Why? What are the reason? First of all is cost of asset, or we can say original cost of or historical cost. If the cost of your asset is high, you have to charge more depreciation. If the cost of asset is less, you will charge less. Estimated net residual value. See, residual value means scrap value, salvage value, and whenever you will calculate the depreciation, at that time you will use that value. Then depreciable cost is a cost of an asset is equal to its cost. Just now we gave you the formula like 1 lakh in 10 years, so 10,000 every year, an estimated useful life. That we will use in the calculation of depreciation under fixed method. Okay, it is useful life means estimated economic or commercial life. Till useful life means up to when we can use this asset properly. It is depend upon the following factors. Generally contractual limit, number of shift to be used, maintenance and repairs that require, technologically obsolescence, innovation in method, and legal and other restrictions. Method we will start in next class. These methods we will start in next class. But today we have completed this theory part of this chapter, that what is depreciation? Depreciation means, I gave you word, permanent, continuing, gradual process in the book value of the fixed asset. Okay, then features of depreciation, same point, decline, continuous, time passage, usage or obsolescence in a continuous way. But be careful, it is a non-cash expenses. Non-cash because it is not paid in cash. Then depreciation, another similar term. First is depletion. Depletion means extraction of natural resources. Okay? Oil well, mines, quarries, etc. Okay? So decline in the value is termed as depletion, and the difference between depletion and depreciation is then amortization. Amortization is related with the intangible asset like patent, goodwill. These are the different terms. Causes of depreciation: wear and tear, usage or passage of time, expiration of legal rights. Obsolescence is the main reason, my dear children. Many electrical appliances, automobiles are going obsolete day by day because of new technology is coming. An abnormal factor is common for all, that is mass destruction, mass depreciation, like earthquake, flood, tsunami. We cannot control it, that's why it is abnormal factor. Okay, I am sure you must be able to understand today's topic.